Hello guys. Sometimes you can ask yourself why this price move from one place to another place. What do I mean by that? You can see this is the price on my right here. Why market come to this price and then why from there to there in that price? Why market move from one place to another place? Don't worry, in this video I'm gonna make it clear to all of you so that you can understand why and how this market actually move. Before going to this video, I would really appreciate you if you subscribe to our channel. We are very near to 10k subscriber. So if you subscribe to our channel and make it one step further, I will really appreciate that. I will be really grateful to all of you. And please don't forget to leave a like. This ICT concepts is based on retail traders liquidity. Now, what is that liquidity? I'll go for the drawing and then I'll come here to this real chart to give you the example. For the retail trader, if you see this is a swing high, this is a top, okay, this is just a top. Then when price just do some things here and move some bit, then come back again very near to this top, make another high, they see that this is relatively equal highs or the resistance zone. Okay, this is their resistance. They start to believe that this zone is going to hold the market and it is going to fall. So here one top, two top, this is double top. According to themselves, this is their resistance zone. So what they do, they actually put a order here. I'm just going to show you like this way. They put a sell order there, target somewhere, and put their stop loss. This is their stop loss above that zone. This stop loss is actually buy stop. So they took sell, put their buy stop there, and buy limit here. So this is called buy limit, buy stop, and the entry. Retail traders buy stop is our buy side liquidity. So we called that buy side liquidity. Same here, when there is a swing low and then market went a bit higher, then come back again very near to this swing low, they start to see this is double bottom, which is a very strong support zone. Now it doesn't need to be like two bottom, it can be three bottom, it can be four bottom, it can be five bottom. The more bottom it will create, the more strong support zone it will be, and then market will go higher. Okay, so they see this is a support zone, double bottom, triple bottom, whatever it is, at least I need double bottom, double top. When they see this, they put a buy limit here, stop loss below the zone, and target somewhere else. So this is their buy, sell limit is here, and there is their sell stop. So retail traders sell stop is, we call it sell side liquidity. Okay, this is our sell side liquidity, and retail traders buy stop is our buy side liquidity. So I believe that now this buy side liquidity and sell side liquidity is clear to you. Wherever I see the support zone or double bottom, triple bottom, whatever it is, I mark the lowest bottom, mark that relatively equal lows as my sell side liquidity. Wherever I see double top, triple top, four top, whatever it is, I mark that high or relatively equal highs as my buy side liquidity. According to ICT concepts, where they took the buy here, we actually target this. That means when market go a bit higher, okay, a bit higher, then maybe they target another resistance zone. Okay, so they see this is their support, resistance here. They have targeted this as their liquidity, or this is their the retail traders limit, or the area they are going to close their trade. So what we actually do, when we saw this, we immediately start to look for a selling opportunity for that area. If there is an opportunity to take entry, then we take the entry over there and we target the sell side liquidity by putting our stop loss in a logical level. No need to worry about the model, our entry model. We will talk about everything in this mentorship series. But right now, try to understand the limit, or sorry, the target, how we target their stop loss. Okay, this is their stop loss. We are going to target that stop loss. Now, here is buy side and sell side. Don't get confused. Just forget about this and just think this is just the double bottom. Okay, no, there is no double top. Just think you have the double bottom. So when you will see the price will go a bit higher, then we will start to frame a sell opportunity over there, and we'll target this area. This will be our entry opportunity. Same here, where they are going to take or frame the sell setup, there we are going to frame our buy setup. When market will react from this area, will fall a bit lower, then we will start to look for our entry opportunity. Okay, so here this area will be our entry opportunity, and we will target their stop loss, their buy stop. That will be our target. Okay, so here this will be our target. So we ICT traders actually go toward the retail traders stops. Retail trader stops is our target. Wherever we see retail traders stops, we target that liquidity. Now there could be a lot of liquidity. For example, previous day high, previous day low, normal swing high, swing low, then previous week high, previous week low, session high, session low, lot of the things. Okay, this will make you very confused, so don't look at that. It is too simple to mark double top or triple top, double bottom, triple bottom, four bottom. It's too easy, and you will be able to mark them. Don't worry, I'll show you from the chart as well, so that it will be absolutely clear to you why what I'm talking about. Here you just focus how I'm going to mark my liquidity level. Okay, so this is sell side, this is buy side liquidity. And if you are still confused, please watch this part one more time. It will be absolutely clear to you why and how we mark our sell side liquidity level, and why and what we actually do. We target that liquidity. How we mark and why we mark the buy side liquidity, and how we actually target that buy side liquidity as our target, or that gonna be give us the entry opportunity by believing that retail traders resistance zone which is not going to be broken, we are going to believe that this is going to be broken. Okay, so where they start to believe it is a very strong zone and it's not going to be broken, market is going to react from that area, it is going to respect that area. We are going to believe that no, it is not going to be respected, it is going to be broken. That is why that is our target. So we believe market will stop them out, and then it will go another level. So this is how market actually move from one price level to another price level. Market always look for the liquidity. Where the liquidity is, after taking the sell side liquidity, it will start to look for the buy side liquidity. Okay, so after taking stop them out, all of them, when they will get stopped out, it will look for the buy side liquidity. Same thing here. After stopping them out, whoever put their buy stop over there, after stopping them out from that price level, to market come to this sell side liquidity level. This is how this market actually move from one price level to another price level. Now we will go to the chart and we will see the real example. Okay, so here I'm just going to mark this area, just small area. You can see this is a high, that is a high, they are relatively equal highs. Okay, and you can see it's a very strong support resistance zone. So retail trader are seeing this is a very strong zone. It's not just a line, it's a zone. Okay, so you can randomly mark this zone, or you can put it a bit lower, so maybe until like this way. Okay, this is their strong zone. See here how beautifully it is reacting here. So what they are going to do, they are going to mark this is a resistance zone, and they are going to enter to that leg. Okay, so here they are going to enter here, and they're going to put their stop loss above this zone, and they're going to target maybe another area where they are going to believe that market will fall. I don't know where is it. I'm just showing you the example, how to mark the buy side liquidity level and sell side liquidity level. Okay, so this is the way I mark this area as my buy side liquidity here. Same thing, I would love to show you the sell side opportunity, or sell side, how to mark that sell side. Here, look at this low and that low. Here, this low has been reacting from this low, this swing low. Okay, so I'm going to mark here a line and going to mark it as a sell side liquidity. So here, this is a sell side liquidity, and this is not a line. Always remember, this is not a line. Mark a zone over there. If you don't want to mark the zone, don't no need to mark that zone right now. Just focus on the low or double bottom, double top. Just focus over there, this low and that low, very near to each other. See, this low and that low is very near to each other. So this is their zone where they are believing that it's not going to be broken. Okay, so they are saying this is a very strong zone, they are not going, it's not going to be broken. So what they are going to do, they are taking their buy there, going to put the stop loss below this area and going to target maybe this buy side liquid or that resistance zone. That is their area to look for the uh, target. What we actually do when market went a little bit higher, we see some setup over there, we are going to take the sell over there. Okay, so we are going to believe that market is going to fall and stop them out first. And this is how they got stopped. When they start to believe this is not going to be broken, we are going to believe that that's gonna be broken for sure, that is going to be broken for sure. Let me show you little more example so that you can easily mark the buy side liquidity and the sell side liquidity. So I will go in another time frame. Here you can see it's 15-minute chart. So I'm going to go in 1 hour chart. So in 1 hour chart, if you take a closer look, maybe in another area. Okay, so over here, just come where I can come. Yeah, let's come over here around this area. Look at this low and that low. What do you see over there? This low, which is a swing low. Market came here to make another support zone, double bottom. What is this? This is their support zone. So it's not going to be broken. They are going to take the buy over there. And then look at that, where the market is coming for. This market is coming for this zone, right? This is their support zone. Market is coming for to stop them out. This is how you can mark the sell side liquidity. Same if you would love to mark the buy side liquidity, you can see this high and that high. They are the relatively equal highs over there. Here, this is that relatively equal highs, or that high is a relatively equal highs. If you can see like this way, this is a very strong resistance zone or double top, which is a very strong resistance zone. Okay, so people actually took the sell over there. When it came back again to this zone or this area, they took the sell over there. They started to believe that this zone is not going to be broken, so they maybe put their stop loss a bit higher and they have targeted this area or this support zone as their target. What happened? Market went fall a bit lower and then started to go higher toward that buy side liquidity. Okay, so I'm going to remove this zone. Instead of that, I'd love to mark that buy side liquidity. I will go much more precise way in my next videos so that it is gonna be absolutely clear to all of you. Right now, by this video, you are just going to you are just learning how to mark the liquidity, sell side liquidity, buy side liquidity, how to mark them. So if you can understand how to mark them in short, or in next video series, this whole buy side liquidity, how many types buy side or sell side liquidity can we mark, and how we should use those liquidity. There's a lot of different types of buy side and sell side liquidity. I'll talk about them in next videos or the series. Okay, where they are going to look for sell, we are trying to look for buy, maybe here, maybe around this area, and we are going to target that strong resistance zone as our target, and we are going to get our profit over there. So guys, I hope that it's a bit clear to all of you to understand how to mark buy side liquidity and sell side liquidity. The easiest way is to mark relatively equal highs or relatively equal lows. Below the relatively equal lows, retail trader put their their buy stop, sell stop, that is our sell side liquidity. Above the relatively equal highs, they put their buy stop, that is our buy side liquidity, and they believe that this buy stop is not going to be stopped, is not going to be taken, or the sell stop are not going to be taken. We believe that they are going to be taken. This is how we trade these ICT concepts, by marking the liquidity level, and we predict the market move, or market move from one price level to another price level depending on that liquidity. So until the next video, cheers guys.